I know a lot of people are so scared about this crazy R word, the R word, recession. It's here, it might be here, we have no idea. And so many people are scared. The thing is, a lot of people are scared about a recession without knowing the actual data and analytics of what happens during a recession in correlation with the stock market and what happens the post year of the recession year that we had. In this video, I want to go over the last 13 recessions since World War II, and this is considered the modern day recession era. I'm going to show you how much the stock market went down during the year, and I'm going to show you how much the stock market went down or recovered the year after. I'm going to give you some data about a bear market, which we currently are in, and then I'm going to give you the average length of a recession and an average length of a recovery. I'm not a financial advisor. This is all purely entertainment and educational purposes only. I'm just giving you the data. What you do with the data is up to you. This article was actually published in the beginning of June, and it's labeled, "How does the market perform during an economic recession? You may be surprised." I'm not going to read you all the boring details. I just want to go all the way to this chart and explain to you what it is. This is a chart that says stock market returns during recession years. I want to read you this very, very important statement. Markets typically bottom out and rebound months before the end of recession. Markets typically rebound months before the end of recession. A couple of months ago, I was telling everybody, hey, we're actually in a recession. I was saying this around 3 months ago. By the time we get the recession numbers at the end of this month, we are currently going to be 1 to 4 months already in to the Q2 recession. And if you add Q1, we're already going to be somewhere between 4 to 7 months into the recession that we are now just being told that we're in a recession. When I was making videos earlier about the recession, I said, if we are currently in a recession, the best possible time to buy stocks, to buy crypto, to buy these assets is during a downturn and during a recession. Why? By the time people realize that we're in a recession, the market is going to start turning around, the economy is going to start turning around, and all of these fail-safes and all of these techniques like raising the federal funds rate and people getting fired, so on and so forth, are going to start taking into effect. Inflation is then going to start coming down, and eventually the recession is going to come back. This is the recession for 13 years. On the left-hand side is all of the actual dates. In the middle is the returns for the S&P 500 during a recession year. There's currently 13 of these. 7 out of 13 recessions, the S&P 500 went down during the year. So the majority of recessions, the stock market goes down. If you want to equate this to us, imagine right now, 2022, we're in a recession. Our stock market is going down. Our stock market was down more than 20%, which actually considered a bear market, not a correction, but a bear market. In the next column, you see following year's return for the S&P 500. Of the 13, only 3 out of 13 post-recession years have been negative, which means 10 out of 13 post-recession years are positive. What is a post-recession year? Probably in our case, it's going to be 2023. More interesting, of the 13, only 1, if you go to 2001, has there been a negative growth year in the recession year and a negative growth rate in the post-recession year, which means most likely, if the past is any indication for the present, which is gonna drive the future, 2023 will be a positive year. Another thing, 75% chance when you have a bear market, the year of the bear market, the following year is actually gonna be a positive year with a positive return of 17%. So if you take all of that into account, most likely 2023 is going to be a recovery year. The average time of recession for these 13 recessions in the modern day era of economic recessions or economic prosperity has been 10 months. That is the average. That's not me making that up. That is a fact. The average recovery after a recession lasts for 57 months. which means the recession comeback lasts 5.7 times an actual recession downturn. If you're only buying at the top and you're not DCAing down, that means the returns that you're going to be making are not going to be the best, but you are going to make something. The people that are bright and smart enough, and I'm not telling you to buy, sell, or do anything, but the people that get that right during the economic downturn, known as a recession and a bear market, prosper in triple-digit returns from the bottom to the top of this recovery. Recessions are nothing new. Recessions are needed to shake out who's ever investing and reallocate funds. At the end of the day, that's all it is. A transformational wealth distribution, as a lot of people like to call it. There has been massive retail investors coming into the market over the last couple of years due to the pandemic, due to apps like Robinhood and Webull and basically no-fee trading. And all these people never saw a bad day. All they saw is stocks are going up, crypto's going up. Hence this crazy wave of YouTubers, financial YouTubers, that never did anything in their real life, and all of a sudden they're experts. Pretty crazy, right? So now that you know the average length of a recession is 10 months, quarter one is 3 months, quarter two is 3 months, that's 6 months. And by the time we get the recession data at the end of this month, it's going to be 7 months, which means if you add another 3 months, we're right around Halloween time. So at the time of Halloween, on average, this would be the time that the recession stops. But we wouldn't get that data until 3 months later, right? There's a delay of at least 1 to 3 months of getting the actual data of the GDP. Why? Currently, we're going to get data for GDP quarter 2 in quarter 3. So if we have another negative quarter or so, we're only going to get the negative quarter for GDP quarter 3 in quarter 4 towards the end of the year. Which means if we get all of these numbers and anything is going to be like the past, and I stress if anything is going to be like the past, 2023, based on all the data I just gave you, all the charts that I just gave you, is going to be a positive return year for the stock market. Positive in the double digits. Now, what does the double digits mean to you? I don't know. I don't know when you bought. I don't know when you sold. I don't know if you're down. I don't know if you're up. You're probably down. But take all of this into account. My personal strategy, dollar cost average every single day. Now I am nibbling, and I started nibbling around 2 months ago. I am going to be buying more after this earnings season. Earnings season is defined as all the companies that are posting earnings for their quarters. I think that we're going to have probably very bad quarter 2 earnings, but then quarter 3 is going to be but quarter 4 and quarter 1 of 2023 are going to start being a lot stronger earnings. I'm going to prepare for that. I could be wrong and I could be right. But if you have no plan of attack, most likely you will fail. You remember how everybody says, if you fail to plan, then you're planning to fail? Well, nothing different with the stock market, nothing different with the crypto market, nothing different with anything. Guys, for the crypto heads, if you want to correlate this video for the crypto heads, and I have a separate crypto channel, crypto is starting to act like a subset of the tech sector of NASDAQ. So if you want to just compare crypto to anything, compare it to any high growth tech stock. Now the correlation is not 1-to-1, but this is going to give you a general understanding of how crypto is going to be acting. Because no, crypto is no longer a hedge against inflation. I go into that detail in my other channel. Guys, I hope this video in some way, shape, or form helps you to make and formulate your own strategic plans, your own strategic moves, and just analyze the data that's around you. People don't analyze and people don't gobble up all of this data, all of this free data that's around you in the universe. And if you prepare for this in the right way, this shift of transformational generational wealth, it's true. A lot of people now, because they can trade from home, both stocks and crypto, and a lot of pretty much anything else. A lot of people that normally would be broke for the rest of their lives are able to make a shit ton of money online because this is the new generation that we live in. Guys, have a great day.